Laddering life insurance. Should you do it? Hi folks, today I discuss the topic of laddering your life insurance. Not to get confused with ladder life, which you may or may not see ads on. This is more of a tailored approach to setting up your life insurance coverage with little left to chance. Now, so how does it work? First, you're going to calculate your coverage. This is standard. We do this every time. You got to know how much you need. And then you'll have basically a total need of insurance based on everything from mortgage, funding, maybe on other life events that you're timing out, maybe producing income to people left behind, spouses, children, things like that. So you'll have this total number, whatever, that you'll be worth today. You'll have a layered or laddered life insurance plan when we go about this next step. So let's just use an example. It's probably the best way to explain it. Let's take a 35-year-old man with a total life insurance need of $2 million. Now, very rarely is it ever exactly that number, but let's say it's $2 million for this guy, and for to provide for his family if something happens to him. Now, in this case, depending on cost, it might make sense to do some laddering with the coverage. So, for example, the first 5 to 7 years, and I'll put a little chart example up here in a second. But the first 5 to 7 years, he might want to have $1 million of that coverage in place as something like yearly convertible or renewable term insurance, a pay-as-you-go sort of deal. And this is all designed to keep the expenses down. Now, then underneath that, kind of like a ladder or a layer, right, because he doesn't have the full $2 million yet, he's going to maybe put another $500,000 of 10-year term life insurance. And that'll carry him out for a flat level premium for 10 years. And then he'll probably discard that as well when that time comes. Now, million plus 500,000 is only 1.5 million, still needs the full 2. So then underneath that, another layer, adding in that other $500,000 of insurance, but this time carrying it out to 20-year policy. This carries out the full need of that declining replacement of his income that he needs, this obligation, right, over time. So additionally, he may want to have coverage, this guy, right, in place for his retirement or beyond. So maybe 20 years doesn't quite get him there. So perhaps it may make some sense for him to take some of this permanent, so this 20-year policy down here, and carve off a little piece of that for permanent life insurance, which again would then replace the part of that 500,000 he needs down in that 20-year band. Now, all this takes place to avoid having to pay potentially expensive, like a 20-year insurance coverage for the full 20 years, right? Maybe he doesn't need $2 million for 20 years when, in theory, his need for life insurance should be going down over time as he survives and creates and continues this income he has to replace to the family. So there you have it, a brief concept of getting a little more strategic with your life insurance coverage. And until next time, I thank you for tuning in and keep doing life better. Take care.